Hello there, my friends. Chris Marcus here with you for another episode of Inside the Markets, where today we will be talking silver with Mickey Fulp, the mercenary geologist. So go ahead and hit that subscribe button now so you can stay tuned. We have a lot of great guests on the show. And with that said, let's welcome in Mickey. Mickey, are you there? And how are you doing today, my friend?
I'm well. I'm here and I'm well, Chris.
Well, it's great to hear your voice. It was good catching up with you down in New Orleans, talking gold and silver. And today I thought would be a good day to dig into silver a little bit more. Obviously, gold gets a lot of the coverage, but just for the audience, as I think they may know, I am a huge silver bug. And Mickey, while you're into the precious metals, not quite as big of a fan of silver. So just to get started, why don't you give an overview of your thoughts on the silver market, what you're seeing, and then perhaps I'll present my counter to that and we can take it from there.
Yeah, I think it's well known that I am not a silver aficionado. I am anti-silver bugs for good reason. I got history behind me. If you look at this idea that silver is going to the moon, well, it went to the moon twice. It went to the moon and briefly in 1980 in a parabolic spike when the Hunt brothers tried to control the market for silver, and they got busted. And then in 2011, it had another parabolic spike that actually preceded the high of gold by a few months, but it soon crashed from there, and it's never touched $50. It's gotten close, but it's never reached a price, even intraday, of greater than $50. So there's fundamental reasons for that. It's mainly an industrial metal, not a precious metal. I will grant you at this stage, the ratio of gold to silver, the price ratio is completely out of whack at about 85 as we speak today. And it's actually come down a bit from last week, about 8% of the time since gold and silver, or gold was floated against the dollar in 1971, and essentially both metals became free trading. About 8% of the time has the ratio been above 80. The median ratio during that period of time has been about 55. So I think you can take the gold price and your upside on silver using the median ratio or something that's normal, which would be somewhere between 50 and 80, about 60% of the time the ratio's between 50 and 80. Calculate a gold price and then figure out the legitimate silver price from there.
And that makes sense. I guess my counter to that, and I think I agree with just about everything you said there, perhaps to provide some perspective of where I started, really back in the throes of the collapse of the subprime bubble about a decade ago, and seeing the massive quantitative easing, 0% interest rates, I expected both gold and silver to soar, which, like you mentioned, in 2011, they did. My belief at that time, again, that was following Ben Bernanke's second QE program.
Mm-hmm.
And I wondered if we were close to the point where the world was about to say we've had enough of the dollar. Now, certainly that didn't manifest back then. Are we in agreement that the dollar system as we know it is somewhat on borrowed time, whether it's this year or 10 or 20 years from now, but that we're looking at a dollar system that is the long-term unsustainable?
Well, I think it's a fiat currency. I put that in context of a world fiat currency is unsustainable now, but led by the U.S. dollar because we're the world's reserve currency. But for exorbitant gold or silver prices to occur, and I consider gold real money, and I do not consider silver money. or it acts, let me put it this way, it acts of precious metal in times of financial duress and calamity. But we are in agreement that if the world economic system collapses, and that will be led by a collapse of fiat currencies and probably a collapse of the US dollar, then gold and silver are going to soar. And I accept that. And I also accept the idea that's going to happen. That's a guaranteed eventuality, but I do not know, as you do not know, when that's going to happen. I don't see it in the next year or two. I thought we were on the verge in 2008 too. I went out and started buying all the gold and silver I could at relatively low prices, mainly gold.
Right.
But you can't negate what the banksters have been able to do to keep the system afloat. And whether this economic collapse happens in my lifetime, I don't know. I doubt it in my lifetime. It may occur in your lifetime. You know, a good friend of mine, Doug Casey's been calling for this since 1979, and it still hadn't happened. So I think we're all in agreement. Hard money, hard asset sort of people are in agreement. We just can't predict when it's going to happen.
Absolutely agree there. The timing is the unknown variable. Certainly, I write a column for Miles Franklin and hear all the time people are tired of hearing it's manipulated. When is it going to happen? And like you point out, that's the part we don't know yet. Although the other thing you mentioned, which is to me one of the key drivers, is the manipulation in the market. We've seen tons of paper written. I go back to 2011. Actually have a quote pulled up here that came out from the Deutsche Bank case a couple of years ago, where a Deutsche Bank trader says, I got the fix in 3 minutes. HSBC trader, I'm bearish. Deutsche Bank trader, ha ha ha. HSBC trader, massively. Really want to sell silver. And then he says, let's go and smash it together. Now we've had a couple of cases come out. JP Morgan trader recently fined. And as I think maybe you mentioned before we started recording, but certainly I get what you're saying about, all right, the markets are manipulated. Let's not sit here and cry about it forever. Yet to the degree that when I look at how the prices have reacted since March of 2009, when the quantitative easing began, you have the stock markets, maybe not quite as much now, but most of them are up over 300%. I think the NASDAQ up 5 or 6-fold. Mm-hmm. Whereas gold, which you would think would respond most, at least equally, if not more so, to money printing, up about 50%, whereas silver is flat. So I agree with you that the manipulation has completely distorted the pricing. And what I think about is, all right, you know, again, we don't know when it will occur, but I hear numbers, Bill Holter and others talk about as many as 500 paper ounces for each physical ounce of metal.
Yeah, well, the gold market's even more skewed toward paper than the silver market. So, but yeah, I'll grant you that, sure.
Yeah, so that's kind of what I'm looking to, where I imagine probably the metals will sit somewhere in this range until we have something that forces that short squeeze. Although when that occurs, again, we've, you know, a lot of folks talk about how silver can be the more volatile one. And perhaps a few data points to get your comment on here. I hear from a lot of folks that at this point, there is actually more above ground gold than silver. And then, of course, the silver market in dollar terms is a lot smaller. So that's always led me to believe that when they finally move, silver by nature would almost have to move quite a bit more. So perhaps I'll stop there and let you comment on anything I just mentioned.
Well, I'm in complete agreement. Silver is always the more volatile metal, both on the upside or downside, when we are in a precious metal paradigm of volatility. We're not in that now. You know, we're certainly not in a bear market for gold. You can argue we're in a bear market for silver, but gold's been range bound. I would argue that the bear market for gold was over by January of 2016. Now we're in a range bound market, neither bull nor bear. I can tell you that, in the history of man, there's been about 174,000 tons of gold mined. That's 5.3 billion ounces. Now, that's numbers from the USGS. That's where I get my data. You look at the World Gold Council and or Goldfield Mining Services, they'll put it a bit higher, maybe 5% higher. I have no idea how much silver there are in above ground stocks, but 98% of the gold ever mined is still on the planet. So if you use the USGS number, it would end up being somewhere about 5 billion ounces above ground stocks, because it's hoarded and 98% recycled. Silver's used, it's consumed, 55% in industrial use, and most of that is not recycled because it's not valuable enough to recycle or not used in high enough quantities in whatever you want to try to recycle. Maybe you have a number for silver above ground stocks. I have no idea what it is. I've never really looked at it and researched it. So your point that if these markets start to collapse, and I will also argue that the stock market bubble, which I think it's a bubble built by the Fed post global economic crisis, the next in a series of bubbles, when that starts going south or collapses, and it will, that precious metals, it will become a risk off. I didn't say that right. It'll become a risk-off environment again. Right now, it's a risk-on environment because people are making money hand over fist in the major markets and have for quite a number of years now. So the idea that they need safe havens has kind of gone by the wayside. When that idea comes back, and it will come back, we've seen it come back a bit in the last couple of months, a risk-off sort of thing with a stock market correction or in near correction territory, then the price of gold and silver going to increase. And because the gold silver ratio is way out of whack and silver is more volatile, it stands to reason that silver is going to increase more percentage wise than gold. So it makes a lot of sense right now to buy physical silver because the ratio is out of whack.
Right.
But with the idea, when it comes back to normality, somewhere between 50 and 70, say 55, then you want to sell your silver and buy real money, which is gold.
Yeah, and that makes sense. And perhaps maybe we're in more agreement than I thought. Let me phrase it this way and see if you agree with this, that in the current environment with manipulation still intact, bubbles still intact, that gold would be likely to perform better. Although if we have manipulation finally overwhelmed and people demand metal and we get some sort of free market pricing back and the bubbles pop, in that scenario, you would be more a fan of silver. Am I getting that right?
Well, I think it's just you look at buying opportunities. So when the ratio is out of whack, you buy the metal that's undervalued. And silver is historically undervalued with respect to gold right now. I've been buying gold because I like gold, but I don't think you want to hoard a bunch of silver unless you have the idea that you're going to turn that into gold when the moment becomes that silver becomes overvalued with respect to gold. And it will, these markets go up and down. Concerning manipulations, all markets are manipulated. I mean, look at the friggin' stock markets. You're a former Wall Street. You traded futures and options of something. I don't know what you were doing, but what 98% or 95% of all trades are algorithmic trades by machines. So tell me that's not a manipulated market where people are trying to game for a billionth of a second and front run your buys and sells. So I just say get over it. That's what I tell the GATA guys over all the time. Get over it and find a way to make money with the paradigm you're given. I mean, that's what we're trying to do here. The markets are manipulated. We're small little guys. There's nothing we can do about it until somebody decides to kill off the banker's ability to manipulate. And I don't see that happening shy of economic collapse. And personally, I don't want to see economic collapse. I'm well prepared. I own guns and gas and gold and goods. So I'm prepared. Most people aren't. And I would not welcome the societal and cultural upheaval that would go with a world economic collapse.
Certainly agree with you there. And speaking of economic collapse, curious your take on the continued volatility, been going on, I guess, over a month now in the stock markets. What do you think is going on there? Are we getting closer to these bubbles popping, or is this another just temporary dip and the stock markets are going to go higher from here?
Well, that's really hard to predict. I've been calling for a correction in the big U.S. markets for 3 or 4 years now. We're way overdue for a correction. As of today, the Dow is down for the year. The S&P 500's down for the year, but not very much, either of those. NASDAQ is barely up for the year, but you take them off their highs, and we are in or near correction territory from their August, early September highs. Is it over? Maybe, but I would probably say it's got a lot to do with people gaming the market. The specs come in, you get a little geopolitical turmoil. You got Trump arguing still with China, and it's kind of set the markets on edge. And personally, I love volatility. I embrace volatility. 4 or 5 years ago, or maybe longer, you remember in the days when Bernanke was going to get up and make a speech for the Fed, maybe 2010, 2011, and gold would go up 50 or $100 on what they thought he would say, and an hour later it dropped 50 or $100. That was volatility. I embrace volatility. I think all market players and traders should, because that gives us good entry and exit points.
Yeah, and certainly doesn't seem like the volatility is going to end anytime soon, especially with the Fed meeting coming up next week, where they've speculated or inferred, whatever word you want to use, that perhaps might reverse course, at least slow down the
Wouldn't that be
hikes next year, or how do you see that playing out?
Well, I think they are going to slow down rate hikes. They came out 2 or 3 months ago when we were getting all those fabulous economic numbers, and Powell said we're on board for 3 rate increases next year. But with the kind of trade deficits and budget deficits we run and our debt, that makes it hard to service the debt. Trump is fighting with Powell. And he's not the first president that's fought with Fed chairmen. Most of them have, but you never heard about it. But the idea that the Fed's backing off, who's responsible for that? I'd say Trump's bully pulpit and his tweets are a significant portion of this idea from the Fed that they're going to ease off on rate increases. I expect a rate increase in December, but I certainly do not expect 3 next year, because then it makes us harder to service our debt.
Yeah, that's the issue that they never seem to mention. Who's going to pay for the higher debt expense if interest rates go up? Also fascinating how you mentioned with Trump and the Fed. I actually have Paul Volcker's book sitting on my table here, which I read an excerpt about how he mentioned back when he was there with Reagan.
Yeah.
I believe it was before the election he was saying this, but at some point where Reagan, or wasn't Reagan, but one of his advisors basically brought him in there and said, don't raise rates. So like you said, not not necessarily the first time that this has happened. And I agree that probably I'd take the under on 3.5 hikes next year, maybe even an under on 3, because again, we've seen, to me, it's not an accident that the markets are having the chaos at this
Yeah.
particular time. So that will certainly be fascinating to see the language and wording when they meet next week. And perhaps just one last question before we wrap up on a slightly different market that I know you follow. I'd love to hear your thoughts on the Palladium Rally, which I believe hit new all-time highs a week or two ago, and certainly platinum a little bit lower. And we've talked about swapping some of those metals before, so curious what you're looking at there.
Well, the platinum to gold ratio is at an all-time low. I haven't done the numbers for this week, but last week it was 0.63. The platinum to palladium price ratio is at a low since 2001, when the Russians embargoed the Western world with palladium for palladium imports, and Ford tried to hoard palladium and got caught short and wrote off $1 billion. So that market manipulation in 2001 was way out of whack. In my opinion, right now, palladium is overvalued, completely overbought, and it will correct. There are some fundamental reasons why it's high right now. There's a supply deficit of palladium. There's an oversupply of platinum from South African stockpiles. But the world's out of whack when palladium is trading so low compared to its sister metal, palladium. Platinum trading way too low with regard to palladium, and also way too low with regard to gold. All-time low. So at some point, that will correct. And that means that platinum is a huge buy right now. I would argue that platinum is a more compelling buy because of that whacked up ratio than silver is right now.
Yeah, and
and with that said, I buy gold on dips yet. So
yeah, and I know that you know the platinum and palladium markets far more in depth than I do. And although it's interesting, certainly a lot of the folks talked with down in New Orleans at the investment conference there did have a similar view. So I agree with you that looking at swapping palladium for platinum could be a good idea to look into right now. So
unfortunately, I don't own any palladium coins. So, it's hard to buy palladium. Your sources it's not as easy to buy palladium as it is platinum, and it's not as easy to buy platinum as it is to buy gold, because the markups on platinum and palladium are about 6%. And if you're smart, you can find gold markups for buy or sell less than 1.5%. So you've got to take that into account too.
Yeah, certainly a lot of fascinating dynamics, although for the people who dig in and really do their homework are a lot of opportunities out there. And again, I appreciate your newsletter and the things that you write and speak about. So perhaps just in wrapping up, you can let folks know how to find your research, how they can get in touch, and things that you offer.
Yeah, I will offer a free subscription newsletter service. But you can become a free subscriber, and then you get my stock picks. And we're very much focused right now on tax loss season buying. So I had a stock pick last week. I like to come in this time of year at the bottom of tax loss selling, which in the junior resource markets will occur. If it doesn't occur today, it occurred yesterday, or it will occur in the next 3 days. And that's when you go in and pick up good stocks on fire sales, and you can flip those in the first week of January and take very nice profits. So there is a short-term trading opportunity that's available to my free email subscribers at mercenarygeologist.com. We're also very active on Twitter with over 52,000 followers at Mercenary Geo.
Well, Mickey, I sure appreciate you mentioning that and coming on to talk some silver, Fed, and palladium today. Again, fascinating things happening. And for people who really go and do the research, there are opportunities out there. And I would be happy to recommend your newsletter. So thanks again for joining me, and we'll look forward to catching up again soon. And it's always a pleasure to talk to you, Mickey.
All right. Thanks a lot, Chris. And I always look forward to reading the comments from the silver bugs when I come out with a negative take on silver.
Yeah, well, we'll do it again soon, and always fun to catch up. So you be well, my friend, and I'll talk to you soon.
All right. Thanks a lot, Chris.